In today's video, we are going to be discussing why the vast majority of traders are incorrect about what is happening with Bitcoin's price action on a macro scale. We'll also be diving into the short-term price action in extensive detail, going over the key levels you need to be paying attention to, what is likely to occur next, and how you can prepare. Let's go ahead and jump in. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you all had a fantastic weekend and ready for a brand new week. And this week is going to be a big week for cryptocurrency as we have the Hong Kong ETF starting to trade on the 30th. We have interest rate data on the 2nd, and Bitcoin is sitting at a crucial short-term support. In today's video, we are going to be going over the macro charts, the short-term price action, the total cryptocurrency market cap, altcoins, and so much more. Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram. It is the first link down below. You'll get access to updates, charts, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. If you are interested in taking your trading to the next level, you can join us over on VIP, where we post trading setups with exact entries, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more. We actually have a sale on at the moment, end of month sale. If you're interested, go ahead and contact me by the earliest or most recent message in the free channel. You can also find out more information about what the VIP is by clicking these links to check it out. Thanks for listening. Let's dive in. So let's get started, guys. On that market data, what are we looking at? So moving over, 24-hour volume is sitting down 16.51%. We are coming out of the weekend, so it is normal to see volume generally low. It is sitting at 88 billion. 24-hour liquidations are down 43%, which is a significant pullback in liquidations, sitting at a total of 88 million. This does tell us already within the last 24 hours, it is likely we have seen a decent amount of up and down price action as a result of, again, liquidations being very evenly split between our long and short positions, but also with that, due to the low total liquidation volume, it is likely that we haven't seen too much volatility in terms of the depth of the price movement. So taking a very brief look at the price action, that is pretty much on par of what we see from the data there. Again, we haven't seen a very large range of price action. This range in the last 24 hours probably spans only about 1 to 2%. And again, we've seen some upward movement and some downward movement, now liquidating both the longs that built up on the way up, and then again the shorts on the way, the shorts on the way up, and again the longs on this short-term correction on the downside. So again, the last 24 hours, not all that much price action, not all that much decision. And we're very much in the same position on the short term as we have now been in for the last 5 or 6 days. Moving over to the broader markets, the DXY again is sitting very similar to where it was a couple days ago at this neckline of resistance, potentially developing some sort of expanding wedge, descending expanding wedge pattern, which could be a potential bullish pattern. However, again, for confirmation that we're going to go higher, we do need to get above this prior local high at 106.5. Until then, we are developing lower highs in a short-term downtrend at an area of resistance. We are still expecting a continuation toward our confluence point of our 2-month-long uptrend and our yearly neckline of support. If we do break below this level, we are expecting the markets to then pick up and continue upwards quite aggressively. If we break above 106, we could see extended corrections across the board for cryptocurrency and for the traditional markets. Moving over to the broader markets, we can see the S&P 500 is looking quite good over here. With 4 days remaining on that weekly candle, it would be ideal to remain above this black line at 5,100 for the weekly. We are still expecting macro continuations upwards, provided our 5,000 level is able to hold. If we do drop below 5,000, that is when we expect our macro corrections to our prior 2021 highs. Our bullish scenario is very much still in play. Exactly the same goes with the Dow Jones over here, provided we remain above our high time frame support at 38 to 37.7. We are expecting macro continuations upwards. If only we lose a weekly candle below below this level, would we then expect a correction to the 50 EMA or the 2021 high point? So without further ado, guys, let's go ahead and jump into Bitcoin. A quick word from our sponsor, BitUnix, before we do. I'd like to introduce our partner, BitUnix. BitUnix is a global, non-KYC, no country restriction exchange, making it a perfect exchange to trade on if you're from the USA, from Canada, the Netherlands, or just prefer to trade without KYC. This exchange is a futures and spot exchange with over 200 different trading pairs, and some of the lowest fees in the game. If you sign up with my link down below, you'll get access to 15% off your trading fees, as well as an exclusive reward center where you can claim up to a multitude in USDT prizes. So go ahead and sign up with my link down below for 15% off, and I'll see you in there. Okay guys, let's go ahead and jump on in. So before we talk about Bitcoin, we do have a few more important notes to discuss. We do have interest rate data coming out on the 2nd of May, so this is around 3 to 4 days from now. Interest rate data at the moment, we are most likely going to see a continuation with paused interest rates, a 97.5% probability we do see those interest rates pause, and only a 2.5% probability we do see a reduction or a cut in these interest rates. Of course, the narrative at the moment is we're building towards a future interest rate cut, and provided that narrative stays intact, which is driving perceived systematic risk downward and pushing investors to accumulate on the long term, asset prices on the higher time frame will generally continue regardless of what happens on the short term chop or short term ranges. So provided the narrative, which is the main driver of risk assets, remains bullish, which it is unlikely we are going to see macro continuations downwards, provided the current narrative remains intact. And as per the data, we can see we still are seeing pauses. We have no probability in raising interest rates. We have no information of that. We are still seeing the current narrative intact. And the next one I do want to talk about is the Hong Kong ETF. Of course, one of the other drivers of macro price action is, of course, policy, regulation, and societal perspective. These are big ones. These are big drivers of macro price action. Alongside these, it does bring new money into the market. So we are seeing on the 30th, the Hong Kong trading will start for the Hong Kong listed spot Bitcoin ETF. Again, unsure of how much volume will come in as a consequence, but new money is new money, and it will be bullish for the markets. Let's move over to Bitcoin, guys. So as we said in today's video, we're going to go deep into the short-term price action, discussing what is happening with this trend line, discussing what is happening on the short-term price action and the higher time frame range. We'll also be discussing Bitcoin dominance potentially moving into an upcoming alt season. We're going over the total cryptocurrency market cap, and we will be discussing in massive amounts of detail why the parabolic phase for Bitcoin is still expected and why the bull run is still very much intact. So let's go ahead and jump over to the short-term price action and dive on in. So at the moment, guys, Bitcoin is still traveling within the high time frame chop zone, and the consolidation range we have been in has now come across to around closer to 3 months. So it's a very, very long consolidation range over here. We are looking at the initiation of this range around that $60,000 region for our range low development, our sell side liquidity at 59.1K, our high side over here, our upper level of resistance sitting around 73.8, and our range high sitting around 72.5. So this range is around a 22% range in depth. It is a very, very large consolidation range for Bitcoin. And as I've said many, many times, if we're looking at it from a purely macro perspective, if we really zoom out our perspective, any price action that happens between our range low and our range high, no matter how sporadic and unexpected it may appear on the short term, it is perfectly healthy consolidation within a range high and a range low. We are in a consolidation range. What we are seeing is high time frame chop within a bullish consolidation. The reason this is a bullish consolidation is, number one, this is a bullish horizontal consolidation as the price action entered from the bottom side in. Generally, when we see the price action enter from the bottom side into a horizontal consolidation, the likely directional continuation is in the same direction of which the price action entered the consolidation range. And number two, if we take a look at momentum on the daily, we can see although momentum has been dropping now for coming on nearly 3 months, the price action has been able to sustain above our high time frame area of support at 60,000. Now this is not to say we have not seen weakness, and this is not to say we are seeing weakness develop, but it is to say that even with the developing weakness, even with the weakness we have been seeing over the last few weeks, the key level of structural supports have been resilient to break down, and this is a sign of absorption. It means buyers are still stepping in, and it is an indication of overall strength. So like we said already, until we drop below this key level of support, we are expecting continuations toward the upside. Whether that happen initially or whether we see continuous chop and sideways price action for a little longer before we see that is irrelevant, because again, any price action that occurs up or down between a range high and a range low is expected continuation and chop price action. Moving back to the higher time frame range, guys, when we look at high time frame consolidations, and consolidations particularly with very large depths, okay, that the percentage gain or percentage distance between the range high and range low is large, we generally see large reactions. So the bigger of a consolidation, think of it like a pressure cooker. The bigger a pressure cooker, the more pressure building up, the bigger the explosion. It's the same thing when we see these consolidation ranges. A smaller consolidation results in a smaller expansion or a smaller correction. A larger consolidation results in a larger expansion or a larger correction. And the trigger points for these expansions and corrections are again our range low and our range high points. So the directional breakdown of these points or break up of these points will result in violent moves for Bitcoin, whether that be again bullish or bearish, depending on the direction of which the price action breaks. So let's talk about those scenarios really quickly and then jump into the short term. A directional break upwards would require Bitcoin to break over, particularly the macro continuation trigger point, which is sitting at 73.8 thousand. A bearish continuation would result in sell side liquidity having to be broken at 59.1k. If we break above this level, we technically enter price discovery. Bitcoin could go very, very high very, very quickly. If we break below our sell side liquidity, looking at historical price data, we can see we have a large VRPV gap over here, which represents a range of low historical trading resistance. That means in this range, we require less volume to move through it from this point to this point. The volume requirements are lower, and since we would have broken down a key level of support, momentum would be negative, which was a reflection of strength. We would have bearish strength moving into an area of lower volume requirements, indicating that volatility would significantly surge the moment we drop below 59.1, which means we could see a flash correction develop after a drop of that range. So the same reaction we see on the downside will be the same reaction we could see on the top side, depending on the directional breakouts. Now again, we're not very close to our range low or our range high, and therefore these points are not very valid for the short term. So what is happening on the short term time frame price action? If we look at the current price action, we have got two things I want to bring to your attention. Point number one is going to be the RSI. Again, we have a downtrend in the RSI. And point number two is going to be the downtrend on the price action. We can see the downtrend on the RSI. This trend line matches with the pivot points of the price action on the higher time frame. Okay, we have got a respective downtrend, which is on the momentum, and the price action showing us clearly that while the price has been moving downwards, we have also seen momentum drop. So if we do want to see the price break upwards, we are going to have to see momentum flip positive. A positive RSI breakout over here will increase the likelihood we will see a continuation above this trend line and thus a continuation upwards. Now, let's go over the bullish and bearish scenarios. The bullish scenario requires two things. Number one, we need to see a break of the downtrend, and like we said already, for us to see a break of the downtrend, we need to break the RSI. And number two, we need to break above this key neckline of resistance at 67,000. A break of 67,000 is when the bulls officially step back in and will push the price action to the range high. So we see 67k break, we expect a continuation to range high. Let's talk about the bearish scenario. At the moment, we are in a downtrend. We are in a downtrend and we are consolidating against a horizontal support. So let's go ahead and show you. This is going to be our downtrend, and this this little box over here, okay, is going to be our horizontal support. So we are expecting to continue downwards until we meet an area of support which is sufficient for buyers to step in and reverse the price action. There are 2 points of which that could occur from. Point number 1 is the lower range at 60k, and point number 2 is the current range at 63. So what does that mean? It means the short-term support is going to be acting as a bearish trigger point for a continuation lower if lost, and while it is acting as support, there is a chance the buyers will step in and push the price upwards. So what does that mean in the short term? It means the key level of support we are retesting has massive significance in regards to where the price action will go next, and where it goes next will determine again the reaction on the higher time frame. Let's go down to a smaller time frame price action. You can really see the depth of what is actually occurring. So even on a short-term price action, you can see right over here, this was our sell side liquidity. We have dropped below it a few times right now, but we are still hanging on to this range of support. And why are we hanging on? Because we haven't seen sustained price action underneath this range of support, and therefore we are still attempting to claim this and retest and bounce from this level. We are watching for bullish reactions over here, and again for bearish reactions at this point. I would look for a bearish reaction if we break down on this RSI trend line. That would be a very good indication we're going to be going lower, okay? And for a bullish continuation, I'd be looking for breaks of these local high points at around 64,000 for confirmation we're going to retest this trend line. That is a short-term price action. Let's jump into the higher time frame. So Bitcoin dominance, guys. Interesting stuff. Bitcoin dominance, very interesting. Bitcoin dominance looks like it's going to collapse, right? If we look historically, we have seen rejections from a very key point, which is this point that I've gone ahead and circled with a red circle. Simple as that. This is the 56% point. What we have seen historically, we have seen as area active support. We are now testing it as resistance, a classic support resistance flip. Okay, classic support resistance flip. That tells us two things. If we break above this level, it's going to tell us Bitcoin will gain against the altcoin counterparts. We'll see altcoins drop against Bitcoin or underperform against Bitcoin. And if we see Bitcoin dominance correct, we are going to see altcoins gradually start to gain against Bitcoin, which could develop into our alt season, right? It's not like, oh, bang, immediately alt season, but it's as Bitcoin dominance starts to fall and fall and fall, the alts will start to pick up more and more against Bitcoin, and then we're going to start entering these parabolic phases for Bitcoin. Generally, if we look for where Bitcoin has topped out in the past, reached an all-time high, it is generally topped out when Bitcoin is around 40% dominance, which could again tell us we are expecting a correction here for Bitcoin dominance over the coming months, which will result in again altcoin season initiating. There are two limitations. Number one, if the total cryptocurrency market cap drops, no matter what happens with this chart, Bitcoin and altcoins will drop, right? It is a Bitcoin dominance chart. If the total cryptocurrency market cap falls, it doesn't matter what happens, both asset classes, altcoins and Bitcoin will drop. Okay, so let's move over to the total. If we look at the total, technically there is one key level of support, and which is this range over here. Above this range, bullish. Below this range, bearish. I could literally end it right there if I want to. It is simple as that, okay? This is, again, our point number one. This is our dead cat bounce high of the prior bear market, and there's a yearly trigger point and support range. If we drop below this level, this will mark this consolidation above, or attempted breakout above this yearly level of resistance as deviation, and we will enter a macro downtrend for the total. Again, this is the total. So the total goes down, Bitcoin and altcoins go down. We enter a macro downtrend. But while we remain above this level of support, this is a primed launch pad for a macro continuation upwards. So yes, guys, the charts have been looking weak, but it's not over. The bulls still have control on the higher time frame. No matter what people are saying, no matter how much FUD you hear, the bear market's coming, the bull market's over, all of these claims are rooted in speculation. The data itself is telling us from a historical perspective, from a technical perspective, and from a structural perspective that the macro charts still have control. Now, if we look at it from a macro perspective in terms of momentum, if we look at technical indicators, mostly moving average based indicators or momentum based indicators, of course these indicators are going to be expressing exhaustion. And people look at exhaustion and they assume weakness. Exhaustion is not always going to be a representation of weakness, okay? Exhaustion, particularly when we look at moving average based indicators or indicators based on momentum, could simply be a expression that over a particular period of time in comparison to a prior period of time, we have seen a reduction in volatility. Now, generally when we see large consolidation ranges, which we are seeing now, we are going to see volatility within, let's go ahead and zoom out, volatility within this cluster of price action significantly be lower than the volatility within this cluster. So if we average it out on a curve, right, if we average out our chart, what we're going to see is we're going to see volatility start to drop downwards. And people assume that dropping volatility is a sign of weakness. It is a sign of exhaustion, but exhaustion with absorption is not weakness, it is bullish consolidation. So there are two things, again, it's your understanding of price action and your understanding of the indicators you're actually observing will help you to actually make these informed decisions. Again, when the probabilities shift in favor of a macro downtrend, it is when that 60K level breaks and not a moment sooner. When 60K breaks, that is when we expect a correction lower, guys. Until that happens, the buyers are in control, the bulls have a chance to continue upwards. So let's go to the macro charts and end off the video. If we look at historical price action, there are a few patterns we are looking at over here, guys. If we take out our pi cycle indicator and our Ichimoku cloud, and we look at the prior patterns over here, we can see a particular pattern that has played out. Structurally, point number one, we are retesting the prior all-time high. Point number two, as we are doing so, okay, the lower band of the pi cycle is breaking into the Ichimoku cloud. And as that is happening, the price action is sitting between the upper band, okay, and the mid bands of the pi cycle, which it remains the entire time until it finally breaks down after the all-time high. Let's go to the next cycle. Exactly the same thing happens again. Lower band breaks into the Ichimoku cloud, price action sitting between the mid bands and the upper band, price action retesting the prior all-time high. Again, 3 points. Moving over to the current cycle, Ichimoku cloud has been broken in by the lower band of the pi cycle, price action sitting between the mid and upper bands, and the price action rejecting from the all-time high, the prior all-time high, as it tests the upper band. The same 3 points of validation we have seen in the prior two cycles is playing out again. It is exactly the same thing. Thank you for watching. Fantastic day. Catch you guys on the one tomorrow. Cheers.